Thanks so much for tuning into this earnings conversation with the management of Titan. In their own words, I think the war on waste program, as well as, I presume, the scale-induced operating leverages led to the best ever profit for FY22. So the year was strong. The quarter, a bit of a miss, though on expected lines because it was as per the guidance as well. The questions are whether that miss that was seen in quarter four, was it a one-off, or is it difficult to say in such an unpredictable and volatile environment that we are in currently? Let's pose those questions to Mr. CK Venkataraman. He's the MD of Titan, joins us right now on the show. Mr. Venkataraman, good having you. Thanks for joining in. Hope all is well, and congratulations on a strong FY22. But would you believe that it's a largely difficult environment to predict how quarter after quarter could be, considering what's happened in quarter four as well?
Thank you, Neeraj, and thank you for starting off by, sort of describing the full year in one go before you got into the quarter, because that's how we would like to look at the time horizon in which we operate is a year and thereafter rather than less than that. Not so much because of the unpredictability aspect, but also because companies should look at themselves in that kind of time horizon. Otherwise, you lose sight of vision and strategy and start getting into pleasing somebody else. So that is what I would start with. Overall, very, very, very pleased with FY22 on the whole. We ended up growing exceptionally in sales compared to FY20 as well, exceptionally in profit compared to FY20 and FY21, and ended on a very, very good wicket, exceeding our own pre-wave 2 budgets on sales as well as profit. So frankly, there is not an ounce of disappointment on any front. And we have become much stronger from a competitive point of view and very, very well poised towards capitalizing on the normalcy that is rushing towards us in multiple from multiple directions. So overall, very positive. Quarter four was there was tremendous pressure on demand, without doubt. Wave 3 was there with us in January and a little bit of February. The international crisis, and particularly its impact on prices of gold, volatility in gold, and also overall anxiety among the public about consumption, had an impact on the overall demand, particularly in the jewelry category in quarter four. But if I look at the competitive position of Tanishq vis-a-vis everybody else in that same quarter, and that's what we keep an eye on, because the overall opportunity for Tanishq in the jewelry industry is almost limitless. I can think of maybe a couple of decades that we can keep on, driving our growth. Therefore, what we keep looking at is, have we become slightly stronger in any quarter? And we believe we have, and therefore that bodes well for FY23. And because the sales was marginally lower than quarter four FY21, I mean, we obviously did not have any operating leverage advantage. Plus, we ended up rewarding all our employees who helped us to clock in such a fabulous overall FY22. So there was a big ex gratia bill in the quarter, which actually applies to all the 4 quarters.
Yeah.
The VRS is a scheme to make the company more efficient, the benefits sitting in the future, and the cost, in a way, belongs to the full year rather than the quarter. But both these, which is about 120 odd crores, ended up getting booked in the quarter because that's when it happened. So when you look at all this, and we've invested substantially in multiple things, in brands, so that from 1st of April, we get a very good growth momentum. So we invested a lot in brand, a lot in digital, a lot in associates and conferences, and therefore, frankly, feeling on top of the world.
Okay. Sir, I had a lot of minutiae questions, but based on your first answer, I want to change the tact of this interview to a slightly medium to long-term kind of a conversation as well. With your permission, if you have another 7-8 minutes, I have 3 more questions on this.
Yes.
Okay. First, for the near term to the, and I include this, by this I mean the next 6 months to 12 months. I looked at the factors which almost everybody says impacted Q4: partial lockdowns, volatile gold prices, geopolitics. Out of that, even if we presume that partial lockdowns are for the time being out of the way, hopefully so, the other two still remain in the picture. Does it become, therefore, very difficult to preempt a strong quarter or strong couple of quarters, even though April was strong? Could it be that it's difficult to predict what May and June could have in store?
While of course it is difficult to predict, but if you just go back to the immediate effect of the geopolitics on our business, it was the rising and fluctuating gold price in March. Okay, so it is not as if the ordinary people are worried or thinking too much about geopolitics, because it has no direct bearing unless it has got a concrete, impact. The concrete impact was the high price of gold and its fluctuating nature. So if you look at today, while the geopolitical problem continues to exist, I mean, the war hasn't ended, but if you just go back to the headlines of March and what was happening on the Ukraine front in March versus what is happening today, and while we continue to feel empathetic about the Ukrainian people and all that, but its effect on, if I take the price of gold, is not at all like what it was in March. In fact, the prices have softened, it has become more stable, and therefore that is finally what affects demand, right? Not the fact that Russia and Ukraine are in some crisis. So to that extent, it is a very different situation today, unless of course some things which we cannot predict change. That of course I wouldn't go down that path in any case. But if I just look at the ultimate effect versus the proximate effect, I can call it, the proximate effect continues to be there, but the ultimate effect, which is the price of gold and fluctuation, is no longer like that in April and nor in May as we speak. So, so therefore, from a 3-4 month point of view, because this is of that nature, I don't see that as having a bearing.
Okay, so Q1, a strong April, Akshaya Tritiya in May, for which you were carrying a fairly large inventory, and I'm presuming it was a strong Akshaya Tritiya week, if not the day, and maybe a slightly better performance in the other segments might ensure that Q1 might be a lot more predictable and based on your normal delivery standards as opposed to getting disrupted by one-offs, I presume.
Yeah, we're very confident about Q1 based on how April has begun. Very, very, very confident.
Got it, sir. On all segments, I presume, not just jewelry, but the others as well, because the others had some issues around EBIT margins, etc., watches, wearables, etc.
See, margin, that's why, margin, if we keep looking at margin from a quarterly basis, as opposed to, a cumulative rolling kind of basis, because we keep investing, right? Also, investing for growth. So I think we should look at it on a 12-month and maybe a rolling 12-month basis. Very confident on all businesses.
Okay. My second question, sir, again, slightly long term. I heard you made a very interesting point in the opening statement that you believe that you could actually show growth on the jewelry side for Tanishq for 20 years. Now, irrespective of whether it's 5, 10, 15 or 20, that's a fairly tall statement coming from a fairly tall leader as well. Can you tell us a bit about this? Because I don't think too many people look that far out when they are looking at a business. What do you mean when you say that?
What do I mean when I say that? It's, 40 to $50 billion industry, and we are maybe 3.5–4 billion in that. So, and we believe we're still at best high single digit in terms of market share. That's point number one. And therefore, there is 90% plus sitting outside what Titan sells. Point number one. Point number two, from a multiple points of view, store of value on the one hand, cultural signal on the one hand, accessory on the one hand, a signal of status on the one hand. Jewelry is a very, very unique category as far as auspicious, cultural auspicious is perhaps a combination. Auspicious on the one hand, the number of dimensions which keep this category going. And it's so deep-rooted in the Indian psyche that in many other categories, it is possible to visualize even technological disruption. For example, coming in a decade from now, because it's very difficult these days to visualize what 2032 will be like. I can imagine that, right? Because what was 2012 versus what is 2022, if I take the smartphones and this and that and all that, the world is a very different place. But some of the categories are not going to go away that soon. And therefore, if I look at the longevity of the category, I think it's going to be 2, 3, 4, 5 decades long. It may be my and your granddaughter, who is quite far away, hopefully, and a granddaughter who's old enough to buy jewelry, who may have different views. But even there, it's finally about maybe the ticket sizes will fall, it become more wearable and all that, but the demand may still exist. But without going that far into the future, from a 10, 15, 20-year point of view, the runway for the category is there. The market share opportunity is very much there. We are at best high single-digit category. There is no other brand today which has got the combination of the things that we offer to the customer that I know is in sight. And it has taken us 25 years to reach us. So it's not easy for somebody else to come in now and do it in some 5 or 10 years. It's impossible. So that's why the longish kind of guidance, if I can call it, it's more about the confidence about decade and 2 decades for this category.
Great to hear that, Mr. Venkataraman. Thank you for that. Thank you for, it behooves to see such a large industry you had a dominant leader out there, but with, as you said, less than 10% market share. So pretty interesting. Thanks for laying that out for us. My last question to you, I heard you mention that you are consistently investing a lot in digital, which you enumerated in the previous conversations as well. Tell us a bit about how do you reckon this might change or add to the dimensions that you already have? How large a contributor could the digital presence be for Tanishq over the course of the next 2, 3, 5 years? Any thoughts there?
Yeah, one is the entire customer relationship management, which we had sort of perfected into an art form over at least 15 years. We introduced a CRM platform about 4 or 5 years ago. And today, that CRM platform brings science and that art of relationship so seamlessly and puts knowledge at the fingertips of every one of our 15,000 plus sales staff in the Tanishq stores, so that they know everything about every customer, what kind of jewelry she buys, and therefore, if we introduce any new jewelry today, depending on the kind of jewelry it is, I'm talking about now the styling, it sort of, our analytics connects customers who are preferring that kind of jewelry in the past and connects that information with the staff. And if there is a birthday or an anniversary or any other special event in that person's life, or if that person is a little more of a activation buyer, a little more of an Akshaya Tritiya or a festival buyer or whatever, and therefore from a timing point, it connects all this information and provides what is called a next best action to the salesperson to reach out to that customer. And then on top of that, from selling next to nothing in FY20 through video assisted selling, we were starting to do 100 crores a month in as far back as July 2020, when the pandemic, few months into the pandemic, because customers were also worried about stepping out and all that. And that's become a kind of way of life today. So much of analytics that we're using to mine data, look at customer preferences, look at, like I said, times of buying and all that, and directly reaching out to them as well with campaigns, with offers, and therefore capitalizing on the one hand, the knowledge that we have through the analytics and the POS information and the relationships that we have on the ground with more than 15,000 people. That combination, we believe it's very unique to Tanishq. Some jewelers would have the relationships. Some sophisticated retailing companies would have the knowledge. But the combination of the knowledge and the relationships, we believe that we are certainly a unique company, and therefore, and it's been paying off for the last 2 years, month after month.
So a phygital model, not necessarily a pure digital or a pure physical, a bit of a phygital model.
Yes, yes.
Okay, great. Just the kind of conversation that maybe we should have had at the end of the year. I think we'll get into the quarterly minutiae the next quarter, Mr. Venkataraman, but thank you so much for these valuable insights today.
Thank you, Neeraj, for leading the conversation in that direction as well, because I think it's very important that all of us, pause and think about the overall competitive situation of any company and its prospects in the near term, rather than spend too much time on just a quarter that ended.
Yeah, we'll do that on the quarterly updates maybe, but thank you for today.
Thank you very much.
Thank you. And viewers, thanks for tuning in.